On Friday morning, markets rejected just underneath the all-time highs. We've been trading in this zone for the last 2 weeks here between 57.50 and 58.50 on the upside. The gamma exposure structure in the options market for the S&P 500 has been showing large gamma exposure concentration at 6,000 and at the 5,900 strike. We've been watching these levels for the past 2 weeks, but the market has been consolidating in this range. The GEX structure is suggesting that beyond this consolidation, if we do break out of this zone to the upside, those 5,900 and 6,000 levels are the likely next targets. This is, in my opinion, anytime between now and the end of the year. Let's just take a look at the earnings calendar for next week. We've got this sorted here by market cap. You can see the largest companies essentially in the market are reporting next week: Apple, Microsoft, Google, Amazon, Meta, and a number of other huge mega cap names. There's well over $10 trillion worth of market cap reporting next week. A lot of that is coming in the back half of the week, October 30th, 31st, and November 1st. So this is going to be a big decision maker, I think, for this consolidation zone, whether we're going to break out to the upside or the downside. Even if we don't see it immediately following the earnings releases, we could continue seeing consolidation into the election. As we mentioned last week, the earnings calendar for last week was extremely quiet, but this coming week, it starts getting a little bit more exciting. We've got JOLTS on Tuesday and the big non-farm payrolls and unemployment rate on Friday. And as I mentioned, the following week, we've got the presidential election on Tuesday, November 5th. Big upcoming events on the economic calendar to definitely pay attention to. And just taking a look at the AAII Investor Sentiment Survey, from a sentiment perspective, positioning is basically neutral. You could see a couple of weeks ago, the market was 49% bullish, which is actually near the 1-year bullish high of 52.9%. So we've come down from that point quite a bit and are back to more of a neutral sentiment. The interesting thing about that is that we are basically within 1% of all-time highs here. We basically have not come down hardly at all. Still, like I mentioned at the beginning of the video, still within this zone that we've been trading in, which is a very narrow range of just over 1%. And so we're basically right there, right at all-time highs, even though market sentiment has come down quite a bit. Now we're looking at the SPY here. At the beginning of the video, we were looking at the S&P 500, and take a look at the gamma exposure structure here. I brought up the S&P 500 gamma exposure structure, and as you could see, it was clearly positive gamma exposure territory, very bullish positioning. When we're looking here on the SPY, however, you can see it is much more neutrally positioned heading into this week. So here we are right at the 0 gamma exposure level, and on both the downside and the upside, there's about an even structure here. And we pay attention to these structures very closely intraday, especially when we're looking at 0 DTE readings on the SPY, S&P 500, and QQQs. And these structures have proven to show bullish or bearish leaning or neutral leaning, depending on what it may be. But it's interesting to me that when we compare the S&P 500 and the SPY, we have such different structures. That to me is just telling me that the S&P 500, which is primarily institutional type traders, that they are structurally bullish on the market heading into year end. Now, that doesn't mean we're not going to have pullbacks. So we could have a pullback, as the SPY is indicating here that there is positioning down between 560 and 570. So of course, there could be a pullback that would represent a 1 to 2% pullback. And that is very possible this week or next week. But the difference being is if we had that pullback, the S&P 500 is so structurally bullish that tells me institutional investors would be aggressively buying that dip, as shallow as it might be. Whereas retail and so many of the other types of global investors that use the SPY for their liquidity would likely be slanting very negative, just with a 1 to 2% sell-off. We've seen that multiple times over the past year. Every single time when the market does have a pullback, the SPY slants structurally negative, while the S&P 500 looks positioned to be buying the dip. And it's no surprise that the market has just continued higher, and we truly have been in a buy the dip environment. And that still seems to be the case when we compare these two structurally as of right now. So now I want to turn to Tesla. Tesla had earnings last week, which we'll talk a little bit more about here in a second, but just look at this chart. These levels that we have identified here are gamma exposures, so three largest gamma exposure concentrations on both the upside and on the downside. So obviously this gap from this week was earnings, really positive surprise on the earnings report. Tesla rocketed higher right into this zone, which we have now reached 3 times since July. This is between the 265 and 270 zone here. And so now we're right back into that zone. A breakout above these levels could see some consolidation, and a slight pullback wouldn't be surprising, given the nature of the move over the past week. However, the market is positioned for higher prices. You can see the largest gamma exposure concentration is at 300. That doesn't mean we're going to get there this week, but it does suggest that investors are positioning in the options market for a further move. So let's take a look at why this is happening. You can just see here from the CNBC headline, Tesla shares jump on profit beat. Musk's prediction of at least 20% vehicle growth next year. They really hit the free cash flow and operating margins out of the park. Second highest free cash flow reading, I think ever, for sure in the last 4 years. Really great numbers. I mean, just blew away all the bears. And this fact that Elon Musk is so bullish himself, suggesting a 20% vehicle growth in the next year is extremely, extremely bullish for the stock. If you just take a look here at this chart that they provide here in the article. Automotive revenue increased 2% over the same period a year earlier. And look at how much automotive revenues contribute to total revenues by segment. Automotive revenues are in the blue. Obviously, this is a huge component of Tesla's revenue. Now, their energy generation and storage is growing by leaps and bounds. I think it grew over 50% from a year ago, I think. And so they're doing a lot of exciting things in other areas other than just direct automotive revenue, but it's such a huge point. If this light blue bar expands by 20 to 30% next year, I mean, you can just see how much Tesla can potentially grow. And so there's just a lot of bullishness coming into the stock because of these figures. So now let's just take a look real quick here at our 3D gamma surface. You can see, this is a very positive gamma surface model that we have here for Tesla. Heading into November, the 260, the 280 levels are obviously important, but here is where the big 300 strike that we were talking about, this January 17th expiration, is really where all of those investors are crowding into. And so that basically just tells me that, sometime between now and the next earnings report, investors believe, at least in the options market, that Tesla has a great shot of hitting the 300 strike by that point. So potentially a 10 to 15% move. And you can just see here on our gamma data graph how large of a factor that is structurally when we look at the GEX. Next, let's look at Apple. Apple also coming into a very interesting spot here. As we mentioned, I believe in Thursday night's video, this 235 level, super important from a resistance standpoint, but also important from a gamma exposure perspective. When we look up the options chain, we've got positive gamma exposure going all the way up to the 250 strike. A lot of this positioning is ahead of earnings, and these are people who are likely playing the earnings that are coming out this week. Remember, the market is not always right, but it's just interesting to me to see what levels market participants across the board, especially in mega cap stocks, what levels market participants are expecting a move in earnings. And so these are net gamma exposure levels. And basically, market participants are expecting a move between the 240 and the 250 range. Doesn't mean we're going to hit it, but I think it's interesting to see how people are positioned, because this is real money at work, because one of the factors of gamma exposure is open interest. Next, I want to take a look at Amazon. Amazon, a little bit less bullish than some of the other mega cap stock names. However, this 190 level throughout the month of October has been such a huge level. We have reached that level actually multiple times in the last week. We hit that 190 strike. So gamma exposure is now showing that the 200 strike is the largest concentration of GEX. And so market participants are bullish also on Amazon with earnings coming up this week for potentially for a breakout of this trend line up into the 200 strike. Google also at an interesting level right at the 165. A lot of the gamma exposure that was there over the past several weeks has rolled off actually. And so we don't see as significant of a skew in the gamma exposure data. Basically seems to be everyone is concentrated right in the 165 to 170 zone. So I don't know. The market's not expecting a huge move. Of course, Google could surprise the market, so that's going to be an interesting one to watch. But this level here around the 167 to 168 zone, that's going to be an important level. So if Google can come out with a really stellar earnings report and break out of that zone, we could see some upward momentum, into the 170s beyond that. Meta is another one we've been watching very closely. We played Meta a couple of times. By the way, you could check out our community Discord just to stay in touch with what we're looking at. But Meta hit this dealer cluster level at the 600 strike. We were watching it all the way back here in the 560s. This gamma exposure concentration was just screaming that market participants were piling into that 600 strike. And so eventually that got hit and it tagged it twice before retreating all the way again back down to this 560 level just the other day. So it's been on a little bit of a selling spree here for the last couple of weeks. With earnings coming up, market participants are still at this 600 strike. So I think the expectation is that Meta will come out with some good numbers and that there will be a third attempt at this 600 strike. That's the way the gamma exposure structure is positioned. Next, let's take a look at Microsoft. Microsoft reporting this week. Not really looking super bullish here either, but market participants, again, positioning for an upside move between 440 and 460. I don't know if Microsoft has the momentum behind it to get up to those levels. I guess it really depends on earnings this week. This is not one that I would be gambling on. I think all of these earnings plays are kind of gambles because you really never know what the report is going to look like. Gamma exposure can really only tell you how market participants are positioned. It can't tell you what the report is going to look like or how participants will react to the report. But I think it's interesting on Microsoft that despite, the lack of bullish momentum really over the past few months, market participants seem to be bullish on it in the gamma exposure structure. Don't forget, if you guys are interested in accessing our gamma exposure dashboard and our option flow analytics tools, head on over to geeksoffinance.com. You can sign up, become a member, and have access to all of our great tools. Also, I'll put a link in the description below for our community Discord. It's free to access. You can come in and check out what everybody is talking about during the trading session. Again, link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.